things maybe have been too good in the stock market lately. And so I told a story on our last video, our Talking Head video, about Joseph Kennedy Sr. I talked about on the podcast last time. And essentially the story is about how when markets are going very well, typically it's a time where maybe you should be a little bit more weary of what's coming up.
Retirement for Life. Your passport to a comfortable and confident retirement. The podcast that's equal parts education and entertainment, where we break down the retirement maze with a dash of fun and a heap of wisdom from your host, Christian Sear CPA, the passionate retirement specialist and president of Sear Financial Wealth Advisors, the independent registered investment advisor specializing in the AIM Retirement System.
All right, welcome to Retirement for Life podcast episode, guys. What did we just say? Episode 46. I actually thought this was 47, but I was wrong. Brooke corrected me several times. Today is going to be a great alphabet soup. We are doing something different. I challenged Emma and Andrea to have one topic for today that's going to absolutely amaze our retirees. I have one that I am very passionate about. And I don't know, we didn't decide about who's going to go first.
You should go first.
Why do I get to go first?
Because you like to talk more than us.
All right. Well, so today I promise you 3 amazing topics. Amazing. Is that a strong word?
Maybe.
Yeah, I think it's a little strong.
According to what you were said
So
this morning.
before we get started, this is funny. So Emma comes in this morning, and we have, every year we have our pumpkin decorating contest at the firm. And everyone has to decorate a pumpkin. Mm-hmm. And so Emma bringing in her pumpkin, she's got kind of a frown on her face. Did I tell you this yet?
No.
And she goes, my husband hates my podcast topic.
Oh, no.
You said it was cheesy, so I did scrap it, and I have a new topic.
Maybe we could do both today, like a bonus tip or a bonus nugget.
I'll skip it if it was cheesy.
All right. So before we get started, I want to talk about the person off camera first. Brooke, want to tell us what happened last night to your dog?
Yeah, my husband and I were coming home from a meeting, and we always let our dog George outside to go pee.
What a cute name for a dog, by the way.
Yeah. And I was in my bedroom, and we had all the windows open, and I could smell the skunks. We have horrible skunks in our town. And I yelled at my husband. I said, did he get sprayed? Because he just got sprayed not too long ago. And lo and behold, he did. So,
Oh,
How
gosh.
do you clean a dog that's been, has any of your dogs ever been
No,
skunked?
Thankfully, no. Close calls, though.
yeah,
Yeah.
it's awful.
It smells really bad, obviously. And how long does it take to get out?
I mean, I don't know. Like, it takes like 2 weeks for it to like fully be gone, the smell. So,
Just got over the last one.
yeah, literally.
And you said it went maybe in his nose.
Yeah, I think it got on his face this time.
That's
So.
what you want to do right before
Yeah,
bedtime,
exactly.
too.
Scrub the dog.
I wonder what a dog thinks when they get sprayed by a skunk. Like, oh, shoot. Or
Yeah, he came back with his head between. He was hanging his head.
Aw.
Poor
All right.
guy.
All right, so I want to go first.
Mm-hmm.
And I am convinced that what I'm about to say is going to become a viral clip. Brooke is going to make a clip out of this, and it's just going to go viral because I believe that everything I say is just so impactful. I think I want to start by saying I want to talk about what I've been on lately. I get on tears. I get on rolls. I find something that I love, and I keep saying it. I keep saying it. I'll do it for 2-3 months at a time. You know, earlier this year, about 3 or 4 months ago, all I wanted to talk about was don't put your money in a 401k. Do a Roth conversion. There's a certain window, and that's all I thought about for 3 months, as Andrew would say, sadly. And now I'm on a new kick. My new kick is about how things maybe have been too good in the stock market lately. And so I told a story on our last video, our Talking Head video, about Joseph Kennedy Sr. I talked about on the podcast last time. And essentially the story is about how when markets are going very well, typically it's a time where maybe you should be a little bit more weary of what's coming up. And, stock market's been up 15 in the last 17 years, all this stuff. So first of all, let's take a stop. Can I do a ask the numbers game, guess the numbers game?
Mm-hmm.
Guess the Number Game.
2023, United States stock market, S&P 500 total return was 26%. Great year.
Mm-hmm.
Would you say great?
Yeah.
Yeah, for
Great.
sure.
Last year, 2024, the stock market, total return, S&P 500, 25%. Another great year.
Yeah.
Mm-hmm.
This year is not over. Today is October 21st. What total return is right around 15%. All right. Hence, me, the bald guy, telling people be careful.
Mm-hmm.
Things have been too good. There's a story about a guy in 1929, JFK's dad. He warned everybody the stock market went down 90%. We should be careful, right? All right. But to some degree, it's also like an old guy starting to get concerned, and really all he cares about is his customers, and they don't like when they lose money, and I don't like when they lose money. So maybe we should be more conservative. I'm seeing all these retirees come in, and they're like, hey, the sky's never going to fall. I have this recency bias. So if you take those last 3 years, average annual return is 22%. Okay, that's what it is. How many times do you think in the history of the S&P 500, that's 1926, the index goes back to, have we had 3 years in a row of 22% or better? On average, right? So it could be 54%, 1%, 23. It could be 22, 22, 22. Average annual return over a 3-year period, over 22%.
I have my number.
Mm-hmm.
I mean, I had no idea. So this is not
I
like,
don't know.
don't feel bad that you don't know. I didn't know.
I'm going to say once.
I was thinking twice.
The answer is twice. The answer is twice. Now, here's the point. Both times that this has happened prior, we've seen different circumstances, different outcomes.
Mm-hmm.
Okay. So the first time was 1943 to 1945. This goes back to my Joseph Kennedy story, right? 1929, he says, I'm going to get out of the stock market. Stock market crashes. It took, depending if you count inflation or not, if you take into account dividends or not, it took 20 years for the stock market to come back. So this was the tail end of that.
Mm-hmm.
20 years of terrible stock market. Everyone's down the dumps. Finally, it comes back. 43, 44, and 45. Stock market had an average return of higher than 22%. Wow. Okay.
Mm-hmm.
So the question I ask is, what happened the next 10 years? The next 10 years were fantastic. In other words, stock market after 3 great years kept on going, going, and going. Post-World War II recovery. So the point is that, yes, we've had 3 great years, 23, 24, 25.
Mm-hmm.
It's happened before, 43, 44, 45. 10 years afterwards, great. Okay? And that's what you always say, Emma, right?
Yeah, there's like I see a lot of research about bull markets, and a lot of times if the market's been up, like in our case 3 years in a row, there's been a lot of examples in history where it keeps going at least for another 2 or 3 years.
Yeah. And we have this AI revolution, which I think is a real thing.
Mm-hmm.
Okay? I like people talk to me about Bitcoin, crypto. I don't know what that is. I don't know if it's going down lately. Did you guys see that?
Yeah.
It's all over.
It's just like a volatile asset that has nothing tangible behind it, but whatever. But I do believe in AI. I've seen it in action. I believe it's like the World Wide Web. Fast forward to 2025. I believe it's driving the economy. Here's the second time we had 3 great years. Ready for this? 1995, 1997. I remember being a kid in the Gulf of Mexico, first time I've ever been on a plane, and I'm trading Cisco, Yahoo, Lucent Technologies. I'm trading all of these tech stocks, and I'm telling my father-in-law about how great the stock market is. And he says, how good is it, smart Chris, the guy who's just married my daughter? And I'm like, it is the greatest thing ever. We're making money hand over fist. So at the time, Yahoo, 1997, how much do you think Yahoo went up? Just guess. How much Yahoo? Brooke, how much do you think Yahoo went up in 1997? She hates when I call him. How much do you think Yahoo went up in 1997? Typical year would be 10%.
Okay, 25%.
Okay.
50.
Yeah, I was thinking 50.
Try 500%.
Wow.
500%. And I'm sitting there, I'm a young kid. I'm like, hey, this is great. I am making money hand over first. Dell computer. You guys remember it? Now you're old enough to know.
I remember Dell.
Dell, and then they had Gateway. And those are the two competing computer companies. And you remember Gateway, their logo was, you don't remember what,
I don't remember.
they
the
had a
logo.
cow.
Oh.
The box would come and it would be like black and white cows. Yeah. Gateway, no longer in business. Dell, still in business. How much do you think Dell went up? The stock Dell went up in 1997. Not as much as,
100%.
Yeah.
yeah, it went up 200%. Okay. Here's what happened. The second time, stock market 3 years in a row, 22%.
Right.
What happened in the next 10 years? We know the story. It was awful. Okay. So my point when I'm making a video about 1929 crash, Joseph Kennedy Sr., market is going to fall, is not because people, I can just see it. We have not released the video yet, but I can just see the comments on YouTube right now. Oh, this guy thinks that the stock market's about to crash. Oh, he's trying to sell fear, and he just wants people to watch him. I am not saying the stock market is going to go down. We just talked about yesterday. When we are looking at a person's retirement plan, all I want to do is make sure that, if possible, when we have the worst case scenario in your retirement for the next 30 years, no matter what happens, you should be okay. All right. I don't want people to think that I'm forecasting a crash, but I do want people to understand that it definitely could happen tomorrow. It could happen tomorrow. Okay. Because Yahoo went up 500% in 1997. Guess what went up 340% last year? The AI baby doll, Palantir Technologies, PLTR. Dell went up 200% in 1997. Guess what went up 171% last year? NVIDIA, the AI chip maker. Okay? You know, this is kind of rhyming to me. And so that's what I have to say about the stock market. Now, what did the customer email you the other day about this interview? What did he say to you? Hey there, RFL show listeners. Did you know that 97% of Americans associate the word financial advisor with simply investing money? But sadly, there is one key piece of information most retirees do not realize until it's too late, and sometimes they miss it altogether. And although retirement is this great emotional victory, sadly, it's actually the beginning of the most treacherous part of your financial life. If you're considering working with a fiduciary who works exclusively with retirees and those nearing retirement, go to aimassessment.com. That is AIMassessment.com. Schedule a complimentary one-on-one visit with me. Ask questions about your retirement situation. Learn more about our trademarked AIM Retirement System and see if we may be a good fit for you. It all starts here with the conversation. AIMassessment.com.
So I had a client reach out and ask basically about the Andrew Sorkin interview on 60 Minutes. And he was asking, how is my portfolio hedged against what he's saying, basically?
Yeah, what are we going to do, right? So Andrew Ross Sorkin, Brooke, throw a picture of him up. Everyone should recognize him. We watch him a lot, right? Because he's in our business.
Yep.
He's a very good reporter, I have to say. For some reason, I think he loves to be an entrepreneur also.
Yeah.
And so in 2009, he writes a book, Too Big to Fail.
Yep.
And it was about the 2008 financial crisis. You guys know that book was on New York Times bestseller list for 6 months.
Wow.
And then HBO paid him a bunch of money so they can make a movie about it. Okay? He did very, very well financially. So I didn't even know that he wrote a book. But now he's written another book, and it's called 1929.
Yep.
Yeah, it's basically like saying we're reliving the Great Depression. It could be basically worst case scenario for the market. And, you know, that type of view is obviously very extreme, and it does scream like marketing. I want to kind of write my book and get people to buy it.
I'm mad at Andrew Ross Sorkin for two reasons. Number one, he's got my clients in a tizzy
Yeah.
thinking that the market's about to crash. He's saying things in interviews like there's a bubble, it's massive, I don't know when it's going to happen. So I decided I was going to take a look and see what he was saying. I listened to a podcast that he was on, and he basically, when it comes right down to it, he's not really saying it's going to happen. He's like, here's the exact quotes that I wrote down from a podcast called All In Podcast. He assumes we're in a bubble. He doesn't know when it's going to happen.
Of course.
He doesn't know how big or how little it might be. And he goes out to say, actually, it could work out in the end. Okay?
Yeah.
Which is what we hear all the time, right?
Yeah.
You have one person saying everything's going to be great, and you have the other person saying everything's going to crash.
Yeah.
I don't appreciate Andrew Ross Sorkin trying to sell books and scaring my customers.
Yeah.
Well, he definitely doesn't know. He can't predict the market. We can't predict the market.
Right.
Really, the only thing we can do is try to prepare for all scenarios.
Right.
So, Andrew Ross Sorkin trying to scare people and buying a book. That's my opinion. Chris Sear, retirement specialist, that guy right there. I want to help people understand that things have been good lately. I'm not saying there's going to be a crash, but here's what I'm selling: a confident retirement where you don't give up if the stock market goes down or not, because you'll be okay.
Right.
All right. Andrew Ross Sorkin, stop scaring my clients. Now, who's going to go up next here?
Mine kind of ties in with what you're
Go.
saying.
I
So
can't wait.
I told you a couple weeks ago, I was at a family function, and one of my family members said that they have multiple accounts everywhere. They are, they have things everywhere. So they in their mind, they don't want to have all their eggs in one basket.
Are
And
they
this
going to be
is-
new customers?
No, probably not. Because, a lot of times we get new clients and they do have stuff everywhere. And a lot of people think that means that they don't have all their eggs in one basket. And that's a frustrating phrase for me because people don't understand that really that phrase just means to be diversified. That doesn't necessarily mean you need to have your accounts at 5 places.
Totally agree.
And, for me, it's not just, that's difficult for them to deal with. They have statements coming in from all these places, but also down the road, your spouse or your beneficiary is going to have to deal with that mess.
Yeah, how
Nightmare
many
mess.
people have we helped where their parents had accounts here, there, and it's impossible to get a hold of them, try to consolidate things. It really is a nightmare.
Yeah. And I just feel like, I would love to be able to get across to people that you don't need to have accounts everywhere. You just need to be diversified within your portfolio, which that alone will help against what you're talking about.
I agree.
If the market's going to go down, you want to make sure your portfolio is ready for that.
You know how I like to crown myself the king of analogies? Mm-hmm. Okay. This is the way I see what you just explained. And Emma, you're right. We see it all the time. Okay. I like a lot of different TV shows. Okay. I theoretically could have 5 big screen TVs in my living room. So I need to be diversified. I need to have 5 TVs,
I
right?
do that too.
Right. But I don't need to because I have this thing called YouTube TV. I have 300 channels all on one TV, right? And people, you're right. It's maddening when people think the way to make sure they can watch the 5 best programs is that they need 5 TVs. No, you've got YouTube, 300 channels. You don't need 5 TVs anymore. You can just switch channels. It's the same thing. You can be diversified in one account. Every single asset you own can be in one account.
Yeah.
You can diversify it with 10,000 stocks if you want to.
Right.
You don't need to have 7, 8, 9 accounts.
Yeah.
People will never get that, though.
I know.
All right. Emma, you're next. But before you are going on the amazing thing, tell us about the barista story.
Okay, when's the last time you guys have been to Starbucks and bought a drink?
I still don't even know what's large, medium, and small.
Like, it's insane. I think the last time I went, just for fun, it was like $7 for a drink.
Yeah.
Yeah, it's crazy.
There's a line out
Who's
the door.
buying that? I don't know.
The drive-through is packed with
No, we have an
20
espresso
cars.
machine on our counter. So.
Yeah, so I've been really building up my home barista. I have an espresso machine. I've got.
Can
the
you picture
cups
this, Brooke?
and all.
Yes.
Home
so
barista.
my latest endeavor is just trying to recreate the drinks that they have at Starbucks. Cold foam. You guys have had cold foam?
Yeah.
Yep.
Yeah, you can make it at home. It's really
I
good.
don't make it. I buy the stuff.
Yeah. But I've got like a full cafe. You guys can stop by, like drive-through style. I just can't believe it's like $7 for a drink, and you're right. There's literally a line out the door every time.
I feel like last night, while Brooke was trying to tend to her skunked dog, she should have stopped over at your house for like a cold phone.
Yeah.
That would have been nice.
Yeah, give you some energy. Up all night scrubbing down the dog.
Oh my gosh.
Yeah, I said that for years. I remember years and years and years ago taking a picture of the Starbucks drive-through, and there's just a line of cars. That's been a great stop.
Yeah.
Did you ever listen to, there's a podcast called How I Built This
Yeah.
by Guy Ritchie, or not Guy Ritchie, Guy somebody.
Not Guy Ritchie, I don't think.
In my opinion, the best podcast out there. Although after a while, I think people don't want to be on this podcast or you can't get it. But it's amazing stories about how founders of companies started their company. I love stories like that.
I think I remember like 10 years or so ago, you would always say, like, it's basically a phase. Who's really paying $6 for a coffee or like a cookie from Crumble or whatever? But I think that's the new thing. People are willing to spend
Stupid.
on
Sorry.
treats like that.
Yeah.
That guy, I can't remember his last name, Howard something. He's no longer, he's kind of retired now, but he started Starbucks. And the story is just amazing.
Yeah.
Who thought to charge $5, $6, $7 for a coffee? He did.
Yeah. And it worked.
Everyone else would have said you're crazy. Imagine going to a bank right now and saying, I got this great idea for a company and I need a $100 million loan, which is basically what he did.
Yeah.
And I'm going to sell coffee mugs right here for $80. They'd be like, you're crazy. It'll never work. But he made it work.
Yeah.
You know? I'm just impressed.
And the best part is there's how many people that are his competition that are doing just as well.
Yeah.
Yeah, right.
Yeah.
And how many Starbucks are there? There's like,
Oh, and they're in so many
Let me
different
look.
countries.
Well, there's what, 3 in just Peru,
Yeah. Right.
They're
within a mile of each other
like,
let's
Neat.
guess the number game. How many Starbucks are there in the world?
in the world. Oh,
Yes.
geez.
Brooke, you go first.
oh Lord.
I'm gonna say in the world, 800,000.
Oh wow.
Is that a lot?
I'm gonna say 6,000. I don't know.
Really? I was going to say like 50,000.
That's pretty good. Now, disclaimer.
It's in like airports
I
and
know.
stuff too.
Yeah.
This is-
every corner.
This is Gemini. The current figures indicate that Starbucks has over 40,000 locations worldwide.
I was.
Yeah, you do.
I went a
forget
little-
about the little one.
Well-
Specifically, sorry,
Yeah.
the last financial report they had, which would have been over a year ago, the company said they had 40,199 total locations in 87 countries.
That's crazy.
Wow.
Yeah, and Dunkin's just as bad. When we were in New York, me and Mason, when we were walking down the streets, we were counting. It was a game who could count the most Dunkin' Donuts as we walked through New York.
Yeah.
So it was just as bad with that too.
Yeah. Well, that's great. All right. Sorry, Emma.
All right,
Thanks for the
We
barista.
can bring it down about 4 fun notches, but have you guys heard of the new catch-up contribution rules? So we're going to throw it back to the Secure Act in 2022, but this is just now being implemented for January 2026. They changed the rules for the catch-up contribution for people, that are 50
like-
or older.
Really old.
Yeah. So if you're 50 or older, you can do an extra contribution to your 401k catch up. Anybody that's making over 145,000, their catch up can only go towards their Roth, which I thought was really interesting.
I did read that.
Yeah.
That's interesting.
And also, isn't it like I said really old? I was talking about myself, right?
Yeah,
I'm making
50
a catch-up
plus,
contribution.
yep.
But isn't there another level, I
Yes.
think, also for older people?
Yeah, they call it the enhanced catch up, and
Isn't
that's
it
for
specifically for 63, 64,
60 and older.
Yeah.
It's kind of like a
64 and older?
There was a specific one for 63, I think.
it's age.
I love
60
it.
to
The government's so
63,
great.
you
I
have
mean,
Yeah.
what did we say about Social Security? Like they make 70 delayed and they make
Yeah.
62.
Yeah.
But the same thing, enhanced. They should really
Yeah.
call it what it is. This is the contribution for old people, and this is the contribution for really old people.
Yeah.
But anyway, they don't want to.
So the catch up for 50 plus is 8,000 and 60 plus is like 11,500. But now if you make over 145,000, it has to be going to your Roth. And I think we tell people a lot of time, we see a lot of people that are maxing out their 401k and taking advantage of the catch up. But a lot of the times they're putting it all into pre-tax dollars.
Yeah.
So I think that this Roth rule, it's for the government to get their tax money right away, but also it could be a very good opportunity for people that are saving, not putting it all into that pre-tax bucket where it's going to be taxed eventually.
Right.
But I just thought that was an interesting rule and something that
Has to go into the Roth.
Yeah.
Wonder why they're making that rule.
I
think just because they don't want them to put more pre-tax money, right? They just want the taxes. But we would prefer that anyway, that they put it into the Roth, right?
They want money now.
Yeah.
Right.
But you know what also that does? And I'm loving this as I'm thinking this through. It solidifies, one of the biggest risks to the Roth conversion is that 4 years from now, they could say, no longer can you put money into a Roth.
Right.
Yeah.
Okay. And that's another frustrating thing. When I'm telling people do a Roth conversion, they're like, well, what if they get rid of Roth conversion? I'm like, you don't get it. The point is to get into a Roth, to get grandfathered in before they take it away, your opportunity to do this. But this kind of gives more stability to the Roth accounts, I think.
Right.
Yeah.
It's kind of like codifying another route to put money into a Roth, and maybe that extends or it gives people a little bit more hope that, the government's recognizing the Roth and hopefully in the short term not going away.
Well, you know what is interesting also, as I said earlier this year, my big charge was very, very few people that I encounter should be putting money into a traditional 401k or a traditional IRA. Very few people does it make sense for, right? Can't make a blanket statement like nobody should do it.
Right. Like I just told one of our clients the other day, they should be saving into their 401k, but that's pretty rare.
But here I am, 2 or 3 videos, about 500,000 views. It's resonating with people. Mm-hmm. And yet I am not able at our firm to walk the same walk that I'm talking about because I don't have a retirement, or up until next year, we didn't have a retirement plan at Sear Financial where we could put money into a Roth. Mm-hmm. So I don't know at what point I realize if I'm convincing literally millions of Americans to put money into their Roth, I should have a retirement account that has a Roth option. But I'm getting the catch-up contribution. All right, you're going to have your editing chops tested here today, Brooke. So that is all for episode 46. You guys are great. I like us just talking here.
Yeah.
Because I think there's always things that we think about. And I said this earlier when we were planning this episode. How many times in the last 14 years do you just randomly send me stuff like, check this out,
all the time.
So when we have those are the things that we could talk about. Mm-hmm. And thanks for watching Retirement for Life podcast. This is episode 46, and we'll see you guys in 2 weeks for episode 47. Bye.
Investment advisory services provided by Sear Financial, Inc., SEC registered investment advisor. All content on this podcast is for information purposes only and should not be considered investment, legal, or tax advice. Material presented is believed to be from reliable sources, and no representations are made by our firm as to another party's informational accuracy or completeness.